Welcome back, everyone. Today we're going to take a look at the top 10 dividend stocks that popped up on my monthly high yield screener. The objective of the screening process is to identify high quality companies trading at attractive prices that I can consider adding to my portfolio. I'll go through the top 10 list first, then I'll explain how the screening process works, and we will wrap up by taking a look at the track record of the past top 10 lists. Alright, let's jump right in. The top 10 dividend stocks chosen for the month of July offer an average dividend yield of 4.82%. Collectively, they have an average 5-year dividend growth rate of 33.34%. And most importantly, they all look potentially undervalued based on dividend yield theory. First up this month, we have Pioneer Natural Resources, ticker symbol PXD, which is an energy company that sports a dividend yield of 11.26% and appears to be about 68% undervalued. Both the dividend yield and dividend yield theory valuation have to be taken with a grain of salt here, as Pioneer has been paying out very generous special dividends during the past 2 years. There's no guarantee that these special dividends will continue in the future, and they have also shot up the company's dividend yield, making dividend yield theory a less reliable valuation measure. In 2020, Pioneer paid out $2.20 in dividends. In 2021, they paid $6.83, and a staggering $25.44 in the prior year. This shot up the dividend yield from nearly non-existent a few years ago to the current double-digit range. In 2023 thus far, the company has paid 2 regular quarterly dividends in the amount of $1.10 and $1.25. On top of these regular dividend payments, they have also paid 2 special dividends of $4.48 and $2.09. This brings the annual dividend to $8.92, which is still pretty far away from the total dividends paid in 2022 of $25.44. I don't own a position in this stock, but I may take a closer look at the business in the upcoming month. Number 2 is Morgan Stanley, ticker symbol MS, which is a financial stock. It currently offers a dividend yield of 3.64% and appears to be about 28% undervalued based on dividend yield theory. Morgan Stanley is slated to announce their next dividend increase in July, and I'll be curious to see if they will keep their super high dividend growth streak going. Last year, the company bumped its annual dividend payout by 40%. And in the prior year, the annual increase was an even more impressive 50%. I own a position in this stock with a long-term outlook. Number 3 is Truist Financial, ticker symbol TFC, which is also a financial stock. It currently sports a high dividend yield of 6.79% and appears to be about 46% undervalued based on dividend yield theory. Truist will likely announce their next dividend increase in August, so we have to wait a little longer to find out what type of dividend bump we will see. The company isn't known to consistently announce above-average dividend increases, but has occasionally surprised long-term shareholders in the past. Given the above-average dividend yield, a modest dividend increase will do just fine. I do not currently own Truist. Number 4 is Best Buy, ticker symbol BBY, which is a consumer discretionary stock. Best Buy currently sports a 4.42% dividend yield and appears to be about 37% undervalued based on dividend yield theory. Best Buy already bumped its dividend back in March, and it was a rather average increase of 4.54%. This was a bit of a letdown as the prior 3 dividend increases were all in the double digits. I have a long position in Best Buy. Number 5 is Paychex, ticker symbol PAYX, which is a financial stock. It has a decent starting dividend yield of 3.26% and appears to be about 15% undervalued based on dividend yield theory. The company raised its dividend in May by a cool 12.66%, which was slightly lower than the 2022 dividend increase, but still at a respectable level. I do not currently own Paychex. Number 6 is Texas Instruments, ticker symbol TXN, which is an information technology stock. It currently has a dividend yield of 2.81% and appears to be about 9% undervalued based on dividend yield theory. The company typically announces their annual dividend increase in October, so we will have to wait a few more months to find out what's in store for 2023. They have a 12-year streak of double-digit dividend increases that I would like to see extended for 1 more year. I already have a position in Texas Instruments, and I am long on this stock. Number 7 is 3M Company, ticker symbol MMM, which is an industrial stock. It currently has a dividend yield of 6.05% and appears to be about 41% undervalued based on dividend yield theory. The share price has struggled as the company faces many litigations, which could result in sizable payouts. The dividend growth is slow to a crawl, as for the past 3 years, 3M has only increased its quarterly dividend rate by 1 penny each year. I wouldn't expect much different in the near future, and given the high uncertainty of its litigation exposure, 3M is a more risky investment. I do not currently own the stock. Number 8 is State Street Corporation, ticker symbol STT, which is a financial stock. It currently sports a dividend yield of 3.45% and appears to be about 22% undervalued based on dividend yield theory. The company should announce the 2023 dividend increase towards the end of September, so we have to wait a few more months to find out the dividend growth rate for this year. Prior dividend increases have varied quite a bit, with mostly solid raises during the last decade that have cooled off more recently. The company did cut its dividend by 95% during the financial crisis, and it took 4 years for the dividend rate to recover. Since then, the dividend growth has been consistent and stable, but that 95% cut must have shaken most long-term shareholders. I do not own any shares of this stock. Number 9 is BlackRock, ticker symbol BLK, which is also a financial stock. It currently pays a dividend yield of 2.91% and appears to be about 15% undervalued. BlackRock raised its dividend back in March by a mere 2.46%, which ended a 3-year streak of double-digit dividend growth. Matter of fact, this was the lowest dividend increase since the company started its dividend growth streak in 2010. I currently have a position in BlackRock, and I'll be expecting better dividend growth from them in the future. And number 10 is Unilever, ticker symbol UL, which is a consumer staple stock. It currently has a dividend yield of 3.62% and appears to be about 17% undervalued based on dividend yield theory. Since Unilever is a British stock, it pays its dividend in pounds and not dollars. Therefore, its dividend history in US dollars is a bit inconsistent. The dividend has grown when measured over the long term, but that growth has been rather low, in the 3 to 4% range. I do not own any shares of Unilever. There you have it, the top 10 high-yield dividend stocks my screening process identified for the month of July. I already own 4 of these 10 stocks, and I will likely consider adding to at least one of them in the upcoming month. I may also take a closer look at the other 6 to see if they would be a good fit in my portfolio. The main objective of this monthly list, for me, is to have a short and tailored list of stocks I can review further. It takes a lot of time to really dig into a company, and I prefer to focus my attention on the ideas my screeners present each month. Let me now walk through how this screening process works and why I like to use it. The main objective of this screener is to find the best combination of high-quality companies trading at attractive valuations with a focus on a good starting dividend yield. The screener starts by generating a short list of stocks from the entire universe of dividend-paying companies. I look for a minimum dividend yield of 2.75%. The stock must also trade on the New York Stock Exchange or the Nasdaq, because I want to be able to easily invest in any of the companies I review. I filter out companies with payout ratios above 100% and negative 5-year dividend growth rates. I also set a minimum threshold of $10 billion for the market cap, as I prefer to invest in larger companies. To narrow in on quality, I only look at companies with a wide or narrow economic moat, a standard or exemplary stewardship rating, and an S&P quality rating of B+ or better. The final 2 filters are a positive 5-year revenue and earnings growth rate, as I like businesses that are still growing. For the month of July, a total of 44 companies passed all of these criteria. I then took all of the selected stocks and ranked them based on quality and valuation, and I sorted them by the best combination of both. To select the top 10 stocks, I look at the potential long-term return for each stock. This isn't an exact science, but I choose only the stocks that have a potential to return at least 12% per year over the next 5 years. Not all of the selected stocks go on to be winners, but overall this process has worked well for me, and I have been able to use it to add new stocks to my portfolio during the last 3 years. I have been running this screening process for 32 months now. The long-term annualized return of the chosen stocks has been 13.19%, which is above my 12% target. There have been a total of 77 unique stocks that have appeared on this top 10 list since November of 2020. Of these 77 stocks, 55 have positive total returns since they first appeared on the list, which means there have been 22 losers thus far. So as you can see, it's not a perfect process, but overall, I am satisfied with the long-term results. The best stock the screener presented thus far has been Principal Financial Group, that is up 114.02% since it first appeared on the top 10 list in November of 2020. It hasn't popped up on the list since December of 2021, but it continues to deliver strong long-term returns. The second best stock is Broadcom, that first appeared on the top 10 list in May of 2021, and since then it is up 103.07%. In all honesty, I don't typically find a lot of ideas from this screener, as my primary investing style is focused more on total return and dividend growth rather than a high dividend yield. But I do find value in this list, as I primarily use it to alert me to high dividend growth stocks that on occasion present a better than average starting dividend yield. This is why I set my minimum dividend yield threshold for this screener at 2.75%. I want to be able to catch quality dividend growth stocks when they go out of favor and present more generous dividend yields. Good examples of such stocks are Home Depot, Skyworks Solutions, and Texas Instruments that I consider to be high dividend growth stocks, and each of whom has appeared on this high yield list in the past. I hope you found this video insightful. If you did, please give it a thumbs up and subscribe to the channel. Thank you for watching and see you next time.